Okay.
Good morning, everyone. This is Judge Wen Dang speaking. I am the lead judge for purposes of conducting this hearing today. Also on the panel with me, as you've probably heard, is Judge Ralston and Judge Wong. Judge Ralston will be replacing Judge Aldrich on this panel, who was unable to attend today. So just like to let everyone know that. Before we begin, I just wanted to go over a couple of ground rules, similar to the pre-hearing conference we held earlier last month. Just please be sure, because of the format of our hearing today, I just want to be sure that everyone speaks very clearly and at a moderate pace so that the court reporter can accurately transcribe what's being communicated today during this hearing. I'm also going to ask that everyone, please, as a reminder, keep your microphones muted if you're not speaking, to cut down on any type of background noise or feedback that we have. Because we have telephone participants today, I'd like to ask that everyone please state your name before speaking. And at this time, again, before we start, I'd just like to ask, does anyone have any questions? Beginning with you, Mr. Schwartz, do you have any questions or concerns? Any updates, anything that's changed since the pre-hearing conference before we begin?
No.
Okay, and CDTFA?
No concerns.
Great, thank you. So let's go ahead and start. Lynn, are you ready? Okay, I see the thumbs up. So good morning, everyone. Welcome to the Office of Tax Appeals. We are opening the record in the appeal of KHN Inc. The case number is 180-42562. It is approximately 9:05 a.m. on June 16th, 2020. This hearing is being held in Cerritos via Webex video conferencing. Today's case is being heard and decided equally by a panel of 3 judges. My name is Wen Dang, and I'm the lead judge for purposes of conducting this hearing. Also on the panel with me today are Judges Andrew Wong and Natasha Ralston. Just again, noting for the record, Judge Ralston is replacing Judge Joshua Aldrich, who wasn't able to attend today. At this time, I'd like to get the appearances of the party just for the record. Will the parties please introduce themselves, beginning with appellant?
Martin Schwartz.
Thank you. And is your client also present, Mr. Schwartz?
No, he's not present today.
Okay, thank you. And CDTFA, could you please state your name and any title that you'd wish to have included with the record?
Randy Suazo, hearing representative.
I'm Jason Parker, hearing representative, and I believe that Christopher Brooks is having some audio issues, so I think he's going to call in to the hearing because he can't hear us talk to him right now.
Okay, thank you. I just want to confirm that Mr. Brooks is still on the line before proceeding.
I believe he's there because I see his video feed, but I've been texting him and he does not have any audio, so he hasn't heard us.
Okay, let's give him a few minutes to get connected before proceeding.
Okay.
Mr. Brooks, I see that you've reconnected. Are you able to hear us and speak at this time? I see that a call-in user has just joined the hearing. Is that you, Mr. Brooks?
Yes, Your Honor, it is.
Okay, thank you. And are you able to hear us okay now?
I can hear you.
Okay, and we can hear you. Thank you.
Okay.
Let's go back on the record and continue with this hearing. My understanding from the peer hearing conference was that the issues in this appeal are whether additional adjustments are warranted to the measure for unreported taxable sales, as well as the negligence penalty and whether appellant was negligent. Mr. Schwartz, is that correct?
That is correct, yes.
Thank you. And a CDTFA, does that comport with your understanding as well?
Yes, that's
Thank
where we
you.
stand.
No, thank you. Mr. Schwartz, I received your submission that you had submitted this past Saturday. It included a summary of the arguments that you intend to make today, as well as a copy of CDTFA's audit schedule. I believe it's 12A02.
That's correct, yes.
Okay, just to keep things simple, I'm not going to admit these into evidence today because I believe CDTFA has already included a copy of their re-audit, so that should include the schedule that you've attached to your submission. Do you have any objection to that?
No, I do not. Hello? Can you hear me?
Mr. Schwartz, are you still on the line?
Yeah, I'm here. You're breaking in and out.
Is this any better?
Yeah, I can hear you now.
Okay, I'm sorry, I apologize for that. Just needed to move a little closer to my microphone. This is Judge Ding speaking again. I was just commenting on the fact that we received your submission that you sent to us this past Saturday, which included a summary of the arguments that you intend to make today, as well as a copy of one of the department's audit schedules. I believe the schedule was AR2.
Correct.
And I'm suggesting that for simplicity's sake, that I'm simply not going to admit these into evidence, and I'm just going to, and the reason for that is because CDTFA has already included it with your submission, so it'll already be in the record. There's no need to have duplicate schedules. Would that be okay with you? Okay.
That will be okay.
Okay, thank you. And I noticed also, Mr. Schwartz, that you had indicated during our pre-hearing conference that you would be submitting various inventory-related documents. Did you still intend to submit those?
No, the documents have already been entered prior. And when it's my turn, I'll just spend a couple of minutes on my thoughts about them.
Okay, I'd just like to clarify something for you, Mr. Schwartz. If it has not been identified, if these documents have not been identified by you at this hearing, they will not be entered into evidence. We will not consider them. I know you had, were these documents the documents you had attached to your opening brief? Are these the one you're referring to, or were they previously submitted to CDTFA prior to your appeal here at OTA?
Correct. These are documents from CDTFA, and these were estimates by the vendors.
Let me go ahead and ask CDTFA briefly. Do you have an idea of what the taxpayer is referring to with these documents? And are they included in the, I guess, in CDTFA's submission?
This is Randy Suazo. Basically, on the there was a few vendors that he had given in one of the appeals hearings, Southern Wines, Young's Market, and I believe somebody else. It was submitted. The problem was there was no way to verify it because it was just a dollar amount only on there. And I believe on the inventory, I believe something was given during the appeals hearing. But whether or not it was for the particular audit period, because the audit period happens mid-year, that's where the contention lies.
This is Judge Dang speaking again. Mr. Swartz, I'm just on the side of caution here because I'm whether or not these documents are already included with CDTFA submission. So I'm going to ask once again that if you've submitted documents at any prior point that you'd like us to consider, you please resubmit those with an exhibit index identifying and labeling each exhibit. You'll find the instructions for that in the pre-hearing conference minutes and orders that was previously sent to you.
Okay, I can do that, but these are documents that were submitted into the audit by the vendors, not by the taxpayer or CDTFA. And these documents were requested by both the taxpayer and the department. And the issue was that the first half of the audit period, the vendors didn't have the documents. They were already deleted from their systems, and the department estimated those purchases. And since purchases and cost of goods is a contention or an issue in this audit, that's why I referenced my letter on November 22nd, 2018. And at this economic downturn in 2008, 9, and 10, the prices were quite lower than they were at the end of the audit. And that's what's kind of skewing the numbers a little bit. So that's why I'm asking for a couple of percentage point reduction in the cost of goods sold, since you're impeaching it anyway, and closing the audit. That, and my client will agree to that and be done with the audit. And the other issue is the penalty, which if it's only 2% reduction, which isn't that much, it should bring the measure of the sales tax under 10%. Thereby, I'm asking for abatement of the penalty, which is kind of substantial too, and we will agree to that and be done with the audit. I agree with everything else. I agree with the markup percentage. The inventory adjustments that were done during the appeal, they're a little bit off, but I'm not going to argue that in the spirit of settling this case and getting it behind us. The only other item I have, which the department did include in their exhibits, is I think it's important to note to the board members that this account was audited again with a no change. So I know that they're aware of that. And then subsequently, he also got a letter, which unfortunately I don't have because I talked to him very early this morning because he couldn't make it.
Mr. Swartz, Mr. Swartz, Mr. Swartz, I'm going to interrupt you for a second. I think you've kind of gotten a little ahead of yourself and started making your presentation.
All right.
At this point, my only concern is we can consider documents that have been identified to us and that have been admitted into, and thus far, only CDTFA has identified any. I'd just like to confirm whether or not you're okay with that.
That I'm okay with repeat that?
I don't have any documents from you that you would like us to consider in this matter, and I'd like to know whether you will you do intend to submit anything for us to consider, or whether you just like to rely on what CDTFA has submitted.
I can do both if you want. I could do both because the information was not submitted to either party because the vendors didn't have it. See, and then CDTFA took what they had in the latter period where the prices of the goods were higher and applied the markup percentage to that number to determine the measure. So I didn't think I would have to work on that, but I could work on that if you would like me to.
If I'm understanding you correctly, you have the vendor information for the periods that were estimated?
I have we both have, I believe, the vendor information that was supplied to us by the vendors, but the dates were, some of them halfway through the audit. They didn't have, from the beginning of the audit, they didn't have it for 2009 and parts of 2010. That's why on that 12AR2, you will see, and the board members can see, that these are estimated numbers because they're even, they're the same amounts for each quarter for the year. Which, in reality, they should all be different numbers, but that's okay. And that's my argument.
Okay, Mr. Schwartz, my question to you is, do you have the vendor information for the periods that were estimated?
Yes. So I believe CDTFA, or I'm old, so I'm calling it the board. They estimated from information that has already been submitted. And they estimated from a latter period and went back and estimated for the prior period of the audit, the beginning of the audit.
Okay, this is Judge Dang speaking again. I'm going to just keep the record open. As I mentioned at the pre-hearing conference, due to COVID-19, the deadline for submitting evidence has been extended to 45 days past the hearing date today. So I'll allow you until that time to submit any documents you'd like us to consider.
Oh, okay. Yes, I'd be happy to do that, and that'll be after July 15th. So once I survive July 15th, I'll have time to work on this. That'd be great.
Okay, and CDTFA, I'm sorry, this is Judge Dang speaking again. CDTFA, you'll have 30 days to respond to any new submissions that the taxpayer will present. Okay, and moving along, CDTFA, we've received your exhibits A through E. Is that correct?
This is Randy Suazo. Yes, that's correct.
This is Judge Dang again. Mr. Schwartz, do you have any objections to the admission of any of these exhibits?
No.
This is Dang again. Thank you. CDTFA's exhibits are now admitted into evidence. Okay, so moving along to our presentations now. Mr. Schwartz, if you're ready to begin your presentation, you have 15 minutes.
Oh, okay. I think I've already run through it, but I'll summarize it again. The two issues that our contentions are that the cost of goods should be a little bit lower, and I've estimated that at 2%. I will submit information to back that up. And once that's done, the measure can be easily, which I did on my letter to you, figured out what the measure will be, and my client will pay the tax on it. And we are asking for abatement of the penalty because nothing was intentional and subsequent audits are no change, and to close the case. That's the only two things that I wanted to discuss today.
Thank you, Mr. Schwartz. Does that conclude your presentation for now?
For now, yes, it does.
Okay, thank you so much. Let me turn to my panel members at this time. Beginning with Judge Wong, do you have any questions for the taxpayer?
This is Judge Wong, no questions.
This is Judge Dang speaking again. Judge Ralston, do you have any questions at this time?
This is Judge Ralston, no questions.
Thank you. And CDTFA, if you're ready to begin your presentation, you have 15 minutes.
This is Randy Swazo again. The appellant operates a convenience store in Imperial Beach, California, selling cigarettes, beer, wine, liquor, soda, sundry items, periodicals, and food. The appellant's start date was March 27, 2004. A prior audit was completed of the business for the period of July 1st, 2004 through June 30th, 2007. The department performed an examination for the audit period of July 1st, 2009 through June 30th, 2012. The department compared gross sales per federal income tax returns and profit and loss statements to the appellant's sales and use tax returns. No material differences were noted. The appellant's profit and loss statements, Exhibit A, page 105, included amounts for both taxable and non-taxable purchases, and separate recorded amounts for taxable and non-taxable sales. Using these amounts, the department computed the recorded markup of cost percentages for the period of July 2009 through December 2011. The recorded taxable markup was only 11.65%, which is much lower than the expected taxable markup for a business of this size and location. Due to the low markup of costs achieved, the department used an indirect markup of cost of goods sold method to compute audited taxable measure. First, shelf tests were performed for the categories of cigarettes, liquor, and wine, beer, soda, and miscellaneous taxable items, including periodicals. The markup for each cost for each category was computed. Exhibit A, page 32. For cigarettes, many of the retail selling prices posted were less than the corresponding costs per purchase invoices. As a result, many of the line items included a negative markup of costs with an overall markup of cost for cigarettes of only 3.23%. Upon investigation, the department found that the appellant received rebates from their cigarette vendors as an incentive to sell certain brands of cigarettes at lower sales prices. The appellant failed to report the taxable rebate income with their sales and use tax returns. Therefore, the department included the rebate amounts with the audit findings and accepted the lower than normal 3.23% markup for cigarettes. This is in Exhibit A, page 97 to 101. Next, the department asked the appellant to provide copies of all purchase invoices for October and November 2011 so that a purchase segregation could be performed to weight the markup of cost percentages. During the segregation of the purchase invoices, the department noted that it appeared some purchases were missing or understated. So the department surveyed 96% of the appellant's vendors to verify recorded purchase amounts. An analysis of purchase information received versus recorded taxable purchases showed that the appellant's recorded purchases were understated by 11%. The department summarized the total vendor survey purchase amounts for the audit period and calculated the taxable segregation percentages. Using the shelf test markups and the segregation percentages, the department computed an audited weighted taxable markup of 23.63%, which was accepted as reasonable. Next, the department computed audited cost of goods sold for the audit period. First, the total purchases per vendor surveys were reduced by a 1% shrinkage allowance, and then quarterly average purchase amounts for each year were computed. During the appeals process, the appellant claimed they purchased additional inventory during the audit period to increase their store shelves and that an inventory adjustment was warranted. The department reviewed the appellant's claimed beginning and ending inventory amounts per the federal income tax returns. They noted that there was a large difference between the inventory amounts claimed in year 2009 versus year 2012. Exhibit page 109 to 110. However, the appellant did not have any documentation or independent inventory reports to support the claimed and apparently estimated yearly inventory amounts. Despite the lack of documentation, the department conceded that an inventory adjustment is warranted. Since the audit begins and ends at mid-year points, the department decided to use the average inventory numbers of 2009 and for 2012 to establish estimated beginning and ending inventory amounts. To compute the allowable amount, the department used the claimed beginning and ending inventory amounts for the appellant's federal income tax returns for both years 2009 and 2012. Beginning inventory in 2009 for the federal income tax returns was at $438,677. Ending inventory per federal income tax returns for 2009 was $588,311. An average inventory of $513,494 was the beginning point of the audit period for the inventory. In year 2012, beginning inventory stood at $803,345. The ending inventory was $798,251. If you average the two out, the 2012 average inventory came out to $800,798. The beginning inventory of $803 and the ending, the difference between these two amounts is $287,000. That is the $800,798 at the end or midpoint of 2012 and $513,494 at the midpoint of 2009. This amount represents the department's recommended combined taxable and non-taxable inventory change for the audit period. The taxable purchase percentage per profit and loss statement of 90.07% was applied. The total inventory change to calculate the department's recommended taxable inventory adjustment for the audit period. This came out to be $258,775. The department's recommended inventory adjustment was spread evenly over the audit period to account for periodic increase of inventory purchased throughout the entire audit period. This means that the audit purchases per the vendor survey were reduced by $21,565 for each quarter in the audit period. This is in Exhibit B, page 124. Net purchase amounts represent the cost of goods sold for the surveyed vendors. The department then calculated audited taxable cost of goods sold for all vendors by dividing the net cost of goods sold by the surveyed vendor percentage of 96.5%, which is the ones that they actually surveyed, to get total taxable purchases. The audited taxable cost of goods sold was multiplied by the audited markup to cost to calculate the audited taxable sales for the audit period. A comparison with reported taxable measure amounts resulted in an understated taxable measure of over $326,000. The appellant contends that the audited taxable measure is incorrect because no inventory adjustment was provided. However, this contention is incorrect. As noted in this presentation, and as can be found on Exhibit B, page 124, the department made an inventory adjustment of $258,775. Additionally, the department has reviewed the appellant's proposed calculation of taxable inventory adjustment for their opening brief and recommends no adjustment to the audit findings or calculations. The appellant has failed to present any substantial documentation for periods within the audit period to prove the estimated amount is more accurate than the department's recommended allowance. Additionally, the appellant's calculation is based on year 2009 beginning inventory and year 2011 ending inventory. Amounts multiplied by an amount of 88% taxable percentage, which is unsubstantiated. The audit period is July 2009, which is the midpoint of the year, through June 30th, 2012, which is again the midpoint of the year. The appellant's proposed calculation includes beginning inventory amounts from 2009, which do not account for the inventory purchase for the 6 months prior to the start of the audit on July 1st, 2009. And the calculation also does not account for the amounts purchased in the first 6 months of 2012, which are part of the audit period. A review of the appellant's claimed cost of goods sold per federal income tax returns shows significantly less purchases in 2012 with a corresponding drop in sales. This is Exhibit A, page 109. This indicates the appellant sold more inventory on hand in year 2012, which would likely include months within the audit period. The department's recommended inventory adjustment accounts for the gradual increase of inventory purchased periodically in the taxable percentages based on the purchase amounts. Thus, the audit findings are reasonable and fair. The appellant's response for a hearing dated 6/13/2020, which was Saturday, has requested a 2% reduction in total taxable purchases, claiming that some vendor information estimated because the vendors had purged the data from earlier time periods and an average of periods were supplied was used to compute the amounts where no data was available. This is Exhibit A, page 53. Basically, it's dealing with two main vendors where 6 quarters are being estimated: Tripco, TRE, PCO, and Southern Wines and Spirits. Pepsi has an estimate for 2 quarters. All the other vendors are on actual basis. There's no estimate made. Review of the reported sales. Reported sales shows that taxable sales of $1,391,970 were actually higher in the periods from third quarter 09 through fourth quarter 2010. That's the first 6 quarters of the audit period. Then the $1,330,194 taxable sales for periods from first quarter 2011 through second quarter of 2012. That's the last 6 quarters of the audit period, which is when an actual data was provided for all vendors surveyed. The higher sales in the beginning part of the period should mean a higher purchase amount in earlier periods. Therefore, we think that the findings are correct, or the estimate is correct. In addition, the appellant has argued that they did have more purchases earlier in the audit period as they were increasing their inventory. While the vendor information was incomplete, the department used the best information available and believes that this information fairly and reasonably estimates the purchases during the audit period. Appellant's response for hearing dated again 6/13/2020 has also requested that the negligence penalty be removed. Penalty is appropriate in this case for several reasons. The fact that an indirect method was used to arrive at taxable sales, the fact that the appellant did not keep complete and accurate records and vendors needed to be contacted to compute the proper amount of taxable purchases, and the fact that this is the appellant's second audit with the same type of error are substantial reasons for negligence penalty to remain. The appellant has not provided any documentation to support their contentions. Therefore, the department requests that the appeal be denied. This concludes my presentation, and I'm available to answer any of your questions you may have.
This is Judge Dang speaking. Thank you for your presentation. Just to make sure that I'm understanding CDTFA's position correctly, the reason for why CDTFA did not allow the requested 2% adjustment to inventory purchases is because for the period where actual invoices were available, purchases had declined over time. So that would have essentially compensated for any price differential. Is that correct?
That's what it seems to be, because the sales would have been higher in the early periods, which means that he would have purchased more items, more cost of goods sold in the earlier periods. I think it's roughly around 3% decline from the beginning of the audit period to the end of the audit period. So actually, he was given a favorable estimate. In addition, he's also been requesting or stating that there was a buildup of inventory And most of the buildup of inventory, if you look at the federal income tax returns, happens within the first 2 years of the audit period. Again, when he's saying that the estimates are higher than they should be.
This is Judge Dang speaking again. Thank you. I apologize if I've been cutting in and out. I wanted to take the opportunity at this time to ask my co-panelists if they had any questions
Hello?
for CDTFA. Hello?
This is Judge Wong. I had no
Breaking.
questions.
Okay.
This is Judge Ralston. I have no questions.
Thank you. I wasn't sure if I was getting through there. This is Judge Dane speaking. Well, let me turn to Judge Wong. Did you have any questions for CDTFA?
This is Judge Wong. I had no questions.
Mr. Schwartz, are you able to hear?
Yeah, well, I did hear no questions from Mr. Wong and the lady. That's all I heard, no questions. Can you hear me?
Mr. Schwartz, this is Judge Dane speaking. I can hear you. Are you able to hear me?
Seems like you're breaking in and out.
Let me go ahead and go off the record for a minute and just take a quick chance to reconnect my internet, see if I can improve things. I will be back just momentarily.
Okay. some technical difficulties. Sales jumped 17%.
This is Judge Dane. Can everyone hear me? Let me ask, Mr. Schwartz, can you hear me?
Yes. Yes.
Okay, thank you for your patience. Let's go back on the record. I believe I was asking my co-panelist, Judge Wong, did you have any questions for CDTFA?
This is Judge Wong. I have no questions.
Thank you. Mr. Schwartz, if you're ready, you have 5 minutes on rebuttal.
Oh, okay. Thank you. Thank you for taking the time to listen to us and to take our side into consideration. I listened to the presentation by the board, and I understand it all. Parts that were a little difficult was it took several years to get through the audit, and there were lots of ups and downs and lots of different people involved within the audit, and numbers changed and so forth, which I do understand because things happen and things change. But I would like an opportunity to revisit the beginning period and the estimated percentage, or how they estimated those purchases, because that's an issue. Because during the recession, which is almost 10 years ago now, the prices were a lot lower, and they were estimated based upon prices that were higher. So I'll like to take that opportunity to maybe submit that and get some reduction in the cost of goods and close the case. And on the cigarette rebates, the taxpayer who's elderly and not from the United States probably didn't know a whole lot was going on, but in subsequent periods, he corrected everything, and that's why in the subsequent audits, there was a no change, and his inventory has been pretty stable in the last few years. So that's all been corrected and done. And still, we would like to have the penalty abated, please. So that's my rebuttal.
This is Judge Dang speaking again. Thank you, Mr. Schwartz. And once again, I'd like to ask my co-panelists, starting with Judge Wong, do you have any questions for the appellant?
This is Judge Wong. I just had one question, Mr. Schwartz, regarding the negligence penalty. Would you like to provide a reason for your contention to delete the negligence penalty?
Yes, because I think if a slight adjustment is made, the measure hopefully will fall within the less material amount and have the penalty abated. So I'm not sure what the materiality percentage is, but either have the penalty abated or maybe even just cut in half.
This is Judge Wong. Thank you. I had no further questions.
This is Judge Dang speaking again. I just would like to piggyback briefly off of Judge Wong's earlier question. If this panel were to decide that no further adjustments were warranted to the taxable measure, is appellant in essence conceding the negligence penalty in that case?
No, I would like the negligence penalty abated either way.
This is Judge Dang. Thank you for your response. I'd like to turn to Judge Ralston. Did you have any final questions for the appellant?
This is Judge Ralston. No questions.
This is Judge Dang speaking again. Thank you everyone for your presentations. I apologize for all the helping us work through these. As a reminder, the record will remain open for 45 days in this matter for the submission of new evidence from either party. If anything new is submitted, rest assured the opposing party will have 30 days to respond to the submission of that evidence. Once the record is closed, this panel will meet and deliberate upon the arguments and the evidence that have been presented to us, and we will endeavor to give you our written opinion within 100 days from that date. Thank you, everyone. Once again, this hearing is now adjourned.
Thank you.
Thank you, Your Honor.